So, Stephanie, today was the kind of day where bond yields went down and the bond proxies, the defensive stocks, actually helped the market from falling even harder. What was behind it?
Yeah, I mean, I think that there's still a little bit of uncertainty about the macro. There's uncertainty about the elections. The yield curve flattening is not ever really a good sign. As you talked about, the dollar strength, gold continues to go up. So there's some indicators out there that are not, they're just flashing yellow signs. Now, I can turn this around and say earnings are really good. The U.S. economic data is really very good. I thought the data this week and all the manufacturing data as of late have been good, and the consumer remains just fine. So, I mean, there's this push-pull. The problem is you're at all-time highs, right? And and now you have earnings are kind of like dissipating.
Well, this would be the point in the program where Mike Santoli says, yes, stocks pulled back today. They're 0.6% away from a record high for the S&P. So keep it in perspective.
I mean, Jeff, to that point, has the recovery from the coronavirus-related pullback been too much of a V-shape, too much of a strong bounce?
No, I don't think so. My long-term proprietary model turned bullish in October of 08. It has never turned bearish since then. The intermediate prop model flips more often than that. Our short-term trading proprietary model turned negative in mid-January, and we took trading positions off the table here. And that looked like a good call for 2 weeks, and then it looked like a bad call for the next 2 weeks. It looked like a good call again today. The markets are a little squirrely here. I think Stephanie nailed it. There's a bunch of divergencies in the equity markets until they sort themselves out. I'm going to sit on the sideline and be patient.
Paul, what stands out for you in terms of sectors that look attractive valuation-wise at the moment?
I like most of the sectors. Whoops, I'm sorry.
Paul Hickey, go for it.
Yeah. So I think on a valuation basis, when you look across the spectrum of sectors, most sectors are trading at their highest valuations relative to the last 10 years. The two sectors that stand out are financials, which are only in about the 50th percentile, and energy, which is in about the 60th percentile. So those are two energy's quite obviously out of favor here. Technology is trading at its highest PE of the last 10 years, but it has traded historically at much higher valuations when you go back before 2009. So I think, we hear a whole lot about how right now, especially with these growth stocks moving so much recently, that we're looking like 99 and 2000. But when you look, there are some similarities, but they're very loose similarities. And then when you dig down deeper into them, there's big differences. For instance, the valuation of growth stocks right now is about a 50% premium to value stocks. In 2000, it was 2.5 times. So the five most highest market cap stocks could double today and still have a lower average PE than the 5 largest stocks in the S&P 500 in 2000. So we're nowhere near those levels. That doesn't mean we're cheap, but it's just those comparisons I don't think can be made. So I think you want to stick, if you're looking for that value, maybe go into the financials here. Technology for a more longer-term play, the valuations are higher than average, or higher than the market, but they're not grossly overvalued relative to the market.
Jeff, just wanted to ask you what you make of the divergence with the Russell 2000. I mean, overall, it's done pretty well, but it has lagged behind the other major averages, and on a down day like today, it actually went up. What does that tell you?
There's been rotation into the mid caps and small caps and out of some of the larger cap stocks. But it's a secular bull market, and secular bull markets run 15 to 20 years. So I think this has got 5, 6, 7 years left in it, and I think all you're seeing, a rising tide lifts all boats. So, I like large caps, mid caps, and small caps.